What triggers an investigation by state regulatory authorities? Select the least likely trigger. A. Consumer complaints filed through NMLS. B. Routine scheduled examination of a mortgage company. C. An MLO completing continuing education early. D. Referral from another state regulatory agency. The correct answer is an MLO completing continuing education early. Completing continuing education early is a sign of compliance and good standing, not a trigger for investigation. Investigations are typically triggered by consumer complaints, routine or for-cause examinations, referrals from other agencies, or suspicious patterns in loan activity. Early CE completion demonstrates proactive compliance. Which content area makes up the largest portion of the SAFE MLO test? A. Federal Mortgage-Related Laws 24. B. General Mortgage Knowledge 20. C. Mortgage Loan Origination Activities 27. D. Ethics 18. The correct answer is Mortgage Loan Origination Activities 27. Mortgage Loan Origination Activities is the largest content area at 27 of the exam, covering topics like the application process, loan processing, underwriting, and closing procedures. Federal laws is second at 24. A surety bond primarily protects which party? A. The mortgage loan originator. B. The mortgage company. C. Consumers harmed by MLO misconduct. D. The state regulatory agency. The correct answer is consumers harmed by MLO misconduct. A surety bond primarily protects consumers who are harmed by MLO misconduct. If an MLO violates regulations and causes financial harm to borrowers, those consumers can make a claim against the bond to recover damages. What is the passing score required for the SAFE MLO test? A. 70. B. 72. C. 75. D. 80. The correct answer is 75. The SAFE MLO test requires a passing score of 75, which means you need to correctly answer 86 out of 115 scored questions. The exam has 125 total questions, but 10 are unscored pretest questions used to evaluate future exam questions. Which is a key feature of an FHA-insured loan compared with a conventional loan? A. FHA loans require a 20 down payment. B. FHA loans require mortgage insurance premium MIP including an upfront premium and an annual premium. C. FHA loans do not require an appraisal. D. FHA loans have no maximum loan limits. The correct answer is FHA loans require mortgage insurance premium MIP including an upfront premium and an annual premium. FHA-insured loans require both an upfront mortgage insurance premium UFMIP, typically 1.75 of the loan amount, often financed, and an annual MIP paid monthly. Minimum down payment is 3.5 with a credit score of 580. Loan limits vary by county. Which of the following is a required step before consummating a high-cost mortgage under HOPA? A. Borrower must provide a 20 down payment. B. Borrower must receive counseling from a HUD-approved counselor. C. Borrower must have a credit score above 700. D. Lender must report the loan to HMDA. The correct answer is borrower must receive counseling from a HUD-approved counselor. Before a high-cost mortgage can close, the borrower must receive counseling from a HUD-approved housing counseling agency. The counselor must be independent of the lender and provide written certification the counseling was completed. A first lien mortgage has an APR of 12 when the APOR is 5. Is this considered a high-cost mortgage under HOPA? A. Yes, because the APR exceeds APOR by more than 6.5. B. No, because the APRA must exceed 15 to trigger HOPA. C. No, because HOPA only applies to subordinate liens. D. Yes, because any APRA above 10 triggers HOPA. The correct answer is yes, because the APRA exceeds APOR by more than 6.5. A first lien mortgage is a high-cost mortgage if the APRA exceeds the APOR by more than 6.5 percentage points. Here, 12.5 equals 7, which exceeds the 6.5 threshold, making this a high-cost mortgage under HOPA. Under the Fair Credit Reporting Act (FCRA), what must a lender do when a borrower is denied a loan based at least in part on information in a consumer credit report? A. Send a notice of intent to litigate. B. Provide an adverse action notice including the name and contact of the consumer reporting agency. C. Refund all application fees within 30 days. D. Repull credit at no charge within 60 days. The correct answer is provide an adverse action notice including the name and contact of the consumer reporting agency. FCRA and ECOA require that the lender provide a written adverse action notice, identifying the consumer reporting agency that provided the report with contact information, informing the consumer of the right to obtain a free copy of the report, and explaining the right to dispute its accuracy. Under TILA, which disclosure must include the annual percentage rate APRA? A. Good faith estimate only. B. Loan estimate and closing disclosure. C. HUD1 settlement statement only. D. Privacy notice. The correct answer is loan estimate and closing disclosure. Under TILA as integrated through TRID, the APRA must be disclosed on both the loan estimate and the closing disclosure. The APRA reflects the true cost of credit including interest and certain fees, helping borrowers compare loan offers. A state regulatory agency issues a cease and desist order against an MLO. What does this order require? A. Payment of a fine within 30 days. B. Completion of additional continuing education. C. Immediate stop to the prohibited activity. D. Voluntary surrender of the license. The correct answer is immediate stop to the prohibited activity. A cease and desist order requires the immediate stop of prohibited activities. This is an administrative enforcement action that regulators use to halt ongoing violations before additional harm occurs. Other enforcement actions like fines or license revocation may follow, but the primary purpose of a cease and desist order is to stop the violating conduct immediately. When a borrower accepts lender credits, what happens? A. The interest rate decreases. B. The interest rate increases in exchange for reduced closing costs. C. The loan amount increases. D. The lock period is extended. The correct answer is the interest rate increases in exchange for reduced closing costs. Lender credits are the opposite of discount points. The borrower accepts a higher interest rate, and in exchange, the lender provides a credit to reduce closing costs. This is beneficial for borrowers who want to minimize cash to close. Under RESPA, what is the maximum time a lender has to provide a loan estimate after receiving a completed loan application? A. 1 business day. B. 3 business days. C. 5 business days. D. 7 business days. The correct answer is 3 business days. Under RESPA as integrated with TILA through TRID, the loan estimate must be provided within 3 business days of receiving a loan application. The application is considered received when the lender has the 6 pieces of information: borrower name, income, SSN, property address, estimated property value, and loan amount. Under the SAFE Act, which activity does not require state MLO licensing? A. Negotiating loan terms with a residential consumer for compensation. B. Taking a residential mortgage loan application for compensation. C. Performing solely administrative or clerical tasks on behalf of a licensed MLO. D. Offering a residential mortgage loan to the public for compensation. The correct answer is performing solely administrative or clerical tasks on behalf of a licensed MLO. Solely administrative or clerical tasks such as receiving, collecting, distributing, or analyzing information common for the processing or underwriting of a loan do not require an MLO license, provided the individual does not communicate with the consumer about loan terms or take an application. What is the primary purpose of the NMLS unique identifier assigned to each MLO? A. To serve as a password for the NMLS system. B. To permanently identify the MLO across all states and employers. C. To determine the MLO credit score. D. To calculate license renewal fees. The correct answer is to permanently identify the MLO across all states and employers. The NMLS unique identifier is a permanent number assigned to each MLO that follows them throughout their career, regardless of which state they are licensed in or which company employs them. It must be displayed on all loan documents, business cards, advertisements, and other materials. It allows consumers and regulators to track an MLO across their entire career. Which of the following loans is generally exempt from the Real Estate Settlement Procedures Act RESPA? A. A federally related residential refinance. B. A 30-year purchase mortgage on a single-family home. C. A loan made primarily for business, commercial, or agricultural purposes. D. A reverse mortgage on a primary residence. The correct answer is a loan made primarily for business, commercial, or agricultural purposes. RESPA does not apply to loans made primarily for business, commercial, or agricultural purposes. RESPA covers federally related mortgage loans on 1 to 4 family residential properties, including purchases, refinances, home equity loans, and reverse mortgages. What is the closed-end mortgage loan activity threshold for HMDA reporting? A. 10 loans in each of the 2 preceding years. B. 25 loans in each of the 2 preceding years. C. 50 loans in each of the 2 preceding years. D. 100 loans in each of the 2 preceding years. The correct answer is 25 loans in each of the 2 preceding years. Institutions that originate at least 25 closed-end mortgage loans in each of the 2 preceding calendar years must report HMDA data. For open-end lines of credit, the threshold is 100 loans. These thresholds help determine which lenders have significant mortgage lending activity requiring reporting. How many hours of NMLS-approved pre-licensing education are required before taking the Safe MELO test? A. 10 hours. B. 15 hours. C. 20 hours. D. 25 hours. The correct answer is 20 hours. NMLS requires 20 hours of approved pre-licensing education before you can take the Safe MELO test. This includes 3 hours of federal law, 3 hours of ethics, 2 hours of non-traditional mortgage lending, and 12 hours of electives. Which of the following borrowers is exempt from paying the VA funding fee? A. A first-time VA loan borrower putting 5 down. B. A veteran with a VA disability rating. C. A National Guard member with 6 years of service. D. All VA borrowers with credit scores above 700. The correct answer is a veteran with a VA disability rating. Veterans receiving VA disability compensation or entitled to receive it are exempt from the VA funding fee. Other exempt categories include surviving spouses of veterans who died in service and Purple Heart recipients currently serving. Down payment amount and credit score do not affect exemption status. A housing community wants to restrict occupancy to persons 55 and older. To qualify for the familial status exemption, what percentage of units must have at least one occupant 55 or older? A. 51. B. 62. C. 80. D. 100. The correct answer is 80. For 55 housing to be exempt from familial status requirements, at least 80 of units must have at least one occupant age 55 or older, and the housing must be intended and operated for older persons. For 62 housing, 100 of occupants must be 62 or older. How many hours of NMLS-approved pre-licensing education are required before applying for an MLO license? A. 10 hours. B. 15 hours. C. 20 hours. D. 24 hours. The correct answer is 20 hours. The SAFE Act requires 20 hours of NMLS-approved pre-licensing education before applying for an MLO license. This includes 3 hours of federal law, 3 hours of ethics, 2 hours of non-traditional mortgage lending, and 12 hours of electives, which may include state-specific courses. A borrower has gross monthly income of $8,000 and the following monthly debts: car payment $450, student loan $250, credit cards $100, with a proposed housing payment of $2,000. What is their back-end DTI ratio? A. 25, B. 35, C. 38, D. 45. The correct answer is 35. Back-end DTI includes all monthly debts plus housing payment. Total monthly debts: 2 housing 4 car 200 student loan 100 credit cards equals 2,800. DTI equals 2,800 8,000 equals 35. A borrower earns 6,500 per month gross income using a 28 front-end ratio. What is the maximum monthly housing payment? A. 1,560. B. 1,820. C. 2,080. D. 2,340. The correct answer is 1,820. Front-end ratio limits housing costs to a percentage of gross income. 6 x 0.28 equals the 39 true to maximum monthly housing payment. This includes principal, interest, taxes, insurance, and any HOA fees. Under GLBA, when must a financial institution provide an initial privacy notice to a consumer? A. Within 30 days of loan closing. B. At the time of establishing a customer relationship. C. Only upon consumer request. D. Annually on the anniversary date. The correct answer is, at the time of establishing a customer relationship. GLBA requires financial institutions to provide an initial privacy notice at the time of establishing a customer relationship. For mortgage transactions, this typically occurs when the loan application is received. Annual notices are also required for continuing relationships. Which of the following is a protected class under ECOA, but not under the Fair Housing Act? A. Race. B. Religion. C. Receipt of public assistance income. D. National origin. The correct answer is receipt of public assistance income. Receipt of public assistance income is protected under ECOA, but not under the Fair Housing Act. ECOA also protects age and exercise of rights under TILA, which are not covered by fair housing. Both laws protect race, religion, and national origin. What is the maximum late payment charge allowed on a high-cost mortgage under HOPA? A. 2 of the past due amount. B. 4 of the past due amount. C. 5 of the past due amount. D. 10 of the past due amount. The correct answer is 4 of the past due amount. HOPA limits late payment charges on high-cost mortgages to a maximum of 4 of the past due payment amount. Additionally, late fee pyramiding, adding late fees to the amount used to calculate the next late fee, is prohibited. How are business days counted for the rescission period? A. Only Monday through Friday. B. All calendar days. C. All days except Sundays and federal holidays. D. Only days the lender is open. The correct answer is all days except Sundays and federal holidays. For the rescission period, business days include all calendar days except Sundays and federal holidays. Importantly, Saturdays are counted as business days for rescission timing. An MLO is asked to prepare loan documents using income figures higher than what the borrower actually stated. This is an example of A. Redlining. B. Steering. C. Income fraud. D. Adverse selection. The correct answer is income fraud. Using inflated income figures on loan documents is income fraud, a form of loan fraud. This is a federal crime that can result in significant fines, imprisonment, and permanent loss of MLO license. MLOs must never falsify application information. Under TRID, what 6 pieces of information constitute a loan application that triggers the loan estimate timing requirements? A. Name, address, phone, email, occupation, credit score. B. Name, income, SSN, property address, property value, loan amount. C. Name, income, assets, debts, credit score, loan term. D. Name, employer, bank statements, tax returns, property address, loan type. The correct answer is name, income, SSN, property address, property value, loan amount. Undertrade, an application is received when the lender has these 6 pieces: 1 borrower's name, 2 income, 3 social security number, 4 property address, 5 estimated property value, and 6 mortgage loan amount sought. Once received, the 3 business day clock begins. Under ECOA, a lender must provide an adverse action notice within what time frame after taking adverse action? A. 10 days. B. 30 days. C. 45 days. D. 60 days. The correct answer is 30 days. ECOA requires lenders to provide an adverse action notice within 30 days of taking adverse action on a credit application. The notice must include the specific reasons for denial or the right to request reasons within 60 days. Which of the following would require a new 3-day waiting period after the initial closing disclosure is provided? A. The recording fees increased by 5. B. The loan products changed from fixed rate to adjustable rate. C. The estimated property value was revised. D. The borrower requested a different closing date. The correct answer is the loan products changed from fixed rate to adjustable rate. A new 3-day waiting period is required when 1. The APRA increases by more than 18 fixed or 14 adjustable. 2. The loan product changes, for example fixed to ARM. Or 3. A prepayment penalty is added. Changes to recording fees, property value estimates, or closing dates do not trigger a new waiting period. Want to practice more? Download the app and get hundreds of practice questions with detailed explanations.